Well, Brent crude is back at around $118 per barrel level, and if you see from the recent lows, it has increased by nearly 20%. Now, there are multiple reasons behind this surge in crude prices. Firstly, is the supply crunch coming in from the traders as they're looking to avoid the Russian crude. Along with this, the European Union government is also considering whether to impose an embargo on Russian crude or not, as they are meeting the US government this week. Along with this, over the weekend, attacks by Yemen's Houthi group also caused a temporary drop in output as on the Saudi Aramco refinery. Also, according to news report, OPEC plus producers continue to undershot the production target even in the month of February. And amid all these factors, if you see, the demand has continued to remain strong, thereby pushing the oil inventories further down and are leading to a rise in crude prices. Also, there has been so far no outcome on the nuclear talks with Iran, a move which was expected to bring in more oil supplies in the market and push the prices downward. However, nothing has been finalized on that front, and thus we have been seeing such a sudden surge in the crude prices. Now, the only risk that remains when it comes to this rise in crude prices is the lockdowns that have been announced in China due to the rising COVID cases, which could impact the demand. However, nothing has that has not impacted the demand so far. So, crude prices continue to remain at this elevated levels, and because crude prices continue to remain at an elevated level and gas prices are expected to rise from the 1st of April, Goldman Sachs has actually added ONGC to their conviction list because of both these factors, and they have maintained their buy rating on the stock with a target price of around 270 rupees on ONGC.